Bitcoin treasury companies like Strategy have recently cumulatively surpassed over 1 million BTC accumulated. However, with just a slight tweak to their buying, they could now be holding significantly more Bitcoin for the same dollars invested. And best of all, you can implement the same simple strategy to massively improve your own investing. So we'll get straight into it here on the Bitcoin treasury companies data we have here on bitcoinmagazinepro.com. And like I said in the intro, the combined BTC holdings of the publicly traded companies, of which there are 85 holding at least 100 Bitcoin, has recently surpassed 1 million BTC with a USD valuation of over $117 billion as I film this, which is pretty amazing considering Strategy set the trend just a few years ago, and really a vast majority of these Bitcoin treasury companies really only started buying very recently in the past year or two. However, I've looked into this and I actually think that a lot of them could be doing a little bit better, which I know is terrible to say. Of course, these Bitcoin treasury companies, if they never sell, are doing a huge net positive thing for the Bitcoin space. Just the supply and demand economics of 1 million more Bitcoin being potentially never moved again is great. It increases the money multiplier effect and massively reduces the amount of capital inflows required to massively increase the BTC market cap, which is obviously a good thing. We're all probably, I'm pretty sure, all invested in Bitcoin and are all doing pretty good. Well, hopefully so, and can afford lots of new shirts and after sun and that type of thing. But if we scroll right down here on the MSTR strategy treasury data page we have here on bitcoinmagazinepro.com, what we can see is looking at this acquisitions here. And I noticed this a while ago, but I just thought I'd look into it a little bit more for this video. A lot of these purchases are at market cycle peaks. If I just zoom in over the current cycle, we can see very, very few purchases down here, many purchases up here. And this isn't really outlining the true size of these purchases as well. If we look here in November, late last year into December 2024, as Bitcoin was going up here at this peak, as we first ran up to $73,000, $74,000 post ETF announcement, was when Strategy were doing the most accumulation. They were buying as aggressively as they could. Now, I understand there are nuances to this accumulation. It's much easier to raise capital when Bitcoin is trending to the upside, money's pouring into Bitcoin. There's a huge amount of volatility in the market. You can issue shares and everyone's hype and they've got a huge net asset value premium ratio. But ultimately, I still think that a lot of these treasury companies could be doing a little bit better. Now, one of the things that I kind of saw that I thought I'd take me down this rabbit hole was this post here by Charles Edwards of Caprioli Investments, who is a great analyst in the space. If you don't follow him already, definitely do so. He's the creator of the hash ribbons indicator and lots of other great data points within the space. But this was outlining the treasury company demand for Bitcoin, how much they're actually accumulating. Now, I know Bitcoin Magazine Pro is obviously the best on-chain data platform, but looking at Caprioli Investments, I hope he doesn't mind. Charles, love to have you on the show. You're welcome anytime. What I did was I zoomed out, and it might be a bit all over the place here, but this is just looking at the accumulation of all Bitcoin treasury companies over time, which at the minute we don't have on bitcoinmagazinepro.com. But what I did, all of these blue lines are when these buying periods peaked before they had a little bit of a cool off. So this is when treasury companies were very aggressively buying Bitcoin throughout this cycle. Now, what we could see is back here in the first very heavy accumulation period, they could have bought around 18% lower if they waited for a dip. And then in the next period, they could have bought 20% lower, then 20% minus 7%, 12, 21% lower, 27% lower, 11, 30%, 2%, not bad, 8%, and most recently about 14% lower. Now, of course, no one has a crystal ball. No one knows exactly what the Bitcoin price action is doing next week, next month, whenever. Anyone that tells you otherwise is probably a pretty good snake oil salesman. But one thing we have done previously on this channel multiple times is look at ways that we can strategically dollar cost average rather than just flat out buying at any point, blind dollar cost averaging into the market. And like I said, there's nuances with the treasury companies, but for this analysis, you'll see what I did. It makes a lot of sense. Is there a way that treasury companies like Strategy could have improved their Bitcoin buying to end up with substantially more Bitcoin, to end up with a potentially significantly higher share price? Well, to do this, I just tried to do the least overfit, most simplistic model I could, which is using the MVRV ratio for Bitcoin. So this is the Z score. You can go to the chart here, but I'm looking at just this MVRV score. And I wanted to just see how Strategy would have looked, their BTC accumulation, if they just didn't buy when Bitcoin was clearly very overheated, when the average investor was at an unrealized gain of 2 or even 3 times their investment. Just don't buy during those parts. So what we can do is go over to TradingView, and what I've mapped out here is, well, it took a very painstakingly long time to do. There are multiple indicators on TradingView which map out strategy purchases over the past few years or the first few years, but I didn't actually find any that did the entire history of MSTR. So I had to make this from scratch. What you can see, the red is the BTC holdings of MSTR, and the green is just all of the purchases they've done. So I've put it on a log scale again. You can see they've been pretty consistently buying. It thins out a lot during the bear cycle, but of course, if the share price is down, they're struggling to raise capital. Volatility is diminishing. It's hard to raise capital. I understand this. So again, I didn't want to make this overfitted in any way. So the rules I've kind of committed to improving this strategy is allowing them to only accumulate with capital that they could have accumulated. So for example, if all of these green dots here, they put that capital to one side and then reaccumulated on a different green bar further into the future. It might make a little bit more sense in a sec. What we can see is, again, this is just the raw MVRV ratio that you see on site. But what we can do is, zooming out, look at the distribution of values on this data point. So rather than picking an arbitrary figure to say don't buy when it's above 2.347 or something very particular, what I'm doing is just eliminating the top percentile of time. So not buying when the MVRV is in the top 20% of its data points. So currently that is around 2.31. Now this is an evolving figure. I want to show you that for these calculations, I used the current MVRV at that period in time. I didn't retrospectively look back to say it was 10% or 20%, over 20% at this point, but it wasn't actually that moment in time. It's only when we have further data into the future. I used a rolling 20% to do these calculations. Now, Strategy first accumulated back here in August of 2020. So really, there's not a huge amount of time where they weren't accumulating. It was only really at the very extreme ends of the bull cycle that we had in 2021, the double peak cycle, of course, and at a very few periods of time during our current cycle. Both when we ran up to about $74,000, $75,000 when Strategy were still very much accumulating, but then very heavily accumulating towards the tail end of last year in November and December of 2024 when we first surpassed $100,000. So if they just saved all of the capital that they'd raised and didn't buy during these times and instead accumulated as Bitcoin dipped beneath this MVRV level, how would the performance have looked? So first and foremost, what we can see here, this orange line, is the spare capital that was available to MSTR. So for example, if we look in November, December 2024, when they were buying very aggressively as Bitcoin was far above that top 20%, into that 20th percentile of MVRV values, we could see they were just putting this cash to the side, which at its peak was about $24.5 billion worth of US dollars sat on the side waiting to buy Bitcoin when it wasn't at such overheated conditions. And then they were able to buy as Bitcoin dipped down here towards that mid $70,000 region. And we can see throughout the entire history of MSTR purchasing, they're just not buying as Bitcoin is at these incredibly highly overvalued, overheated market conditions. As Bitcoin retraced around 50%, again, they're reaccumulating. So what I can do is if I just remove this spare capital data point we have here, we can see as MSTR were accumulating all the way up here, we were holding fire, we were hanging back, and then they were buying aggressively if they were to follow this approach as Bitcoin retraced. And we see this habit happening again and again and again. Now, all through the bear cycle, these were moving up in parallel because the MVRV was beneath this threshold, they were buying as normal. But then again, as Bitcoin ran up to above $70,000 for the first time, we were hanging back. We weren't accumulating as Bitcoin was getting overvalued. And then again, as we caught up, as MSTR accumulated, but we had all of this spare cash to the side, we accumulated heavily. Basically, all of this buying that MSTR did throughout this period of time, we put in all in one purchase back here. Now, again, there are nuances to this. Would this have played out exactly like this? No, because if you're trying to buy billions of dollars of Bitcoin, you're likely going to have some market impact and slippage. And because we weren't actually seeing this accumulation in this hypothetical scenario, we may not have seen the Bitcoin price rally as exponentially because there simply wasn't as much purchasing power occurring. However, again, I still think that this is very much indicative of a rough outcome, a good estimate of how this would have played out. But if we zoom out, what we can see is if I just add on the scale so that you can see exactly the difference between these two values and make sure I'm moved over here so you can just see the values, what we can see is MSTR's current purchases have led them to around 638,000 Bitcoin. Where has it gone? Over here. But if they would follow this very, very simple MVRV strategy to just not buy when the MVRV is incredibly inflated to the upside, they would currently have 685,000 Bitcoin, just a smidge under 50,000 Bitcoin more, which is pretty remarkable from just a very basic strategy. Now, what I can do is if I just go to the top public Bitcoin treasury companies here, looking at that additional 50,000 Bitcoin that they could have had, if we look at the active Bitcoin treasury companies, just those that are actively trying to accumulate Bitcoin, this amount of Bitcoin, this 50,000 Bitcoin, is the equivalent of every single other Bitcoin strategy company, Bitcoin accumulation company, excluding Marathon Digital, little asterisk there. If you exclude Marathon Digital, this additional 50,000 Bitcoin that they could have had is essentially the same amount of Bitcoin that every other Bitcoin treasury company has accumulated in their entire lifetime, just from not buying in the top 20% most overheated days of market conditions for Bitcoin over the past 5 years. A strategy that is entirely replicable by yourself simply by looking at one data point without any overfitting. And one thing I'll quickly mention is using a very similar approach to this, but using the short-term holder MVRV rather than just the raw MVRV, something that we've discussed extensively in our weekly analysis pieces for site subscribers, using a very similar approach, just not buying when the market is incredibly overheated, doesn't just work for Bitcoin. We tried it in the altcoin market and it resulted in an outperformance of just blind dollar cost averaging. We even implemented it for strategy itself, just accumulating MSTR shares, and you would have outperformed blind dollar cost averaging. We even tried it for buying the S&P 500, something that has seemingly been and deemed impossible to outperform. This is since 1970. Implementing a strategic dollar cost averaging approach, just buying the S&P 500 when it's not incredibly overvalued, results in outperforming blind dollar cost averaging. Just to prove that these type of approaches aren't overfitted, they're incredibly simple to implement, relying on one data point, removing all emotions and biases, and they can outperform in pretty much any market condition. So just to summarize, treasury companies buying Bitcoin is a net positive for the space, assuming, of course, they never sell. However, if companies such as Strategy or MSTR implemented some of the most basic criteria to prevent buying in extremely overheated conditions, they could be holding tens of thousands more Bitcoin worth billions of dollars. 50,000 more Bitcoin at the current price, 115K, is well over $5 billion additional Bitcoin that they could be holding. And like we could see looking at the active Bitcoin treasury companies, this would be far more than pretty much every other Bitcoin treasury company combined. And this is an approach that anyone can implement. Any treasury company can implement. This isn't a particularly complicated or difficult strategy to implement, and it's not one that's likely going to lose its edge in the near term. Of course, we need to acknowledge that there are accumulation nuances, raising capital, issuing new shares, market slippage, and that type of thing will always impact the accumulation slightly. This is a very black and white analysis into the matter. If you like this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, or for a fraction of the standard industry price. And let me know what your thoughts are on treasury companies and even individuals using a more strategic dollar cost averaging approach to try and get a little bit more bang for your buck, to save up money during those incredibly overheated market condition periods, and just buying when the market has had a little bit of a dip and the price action has come to you. I'd really love to see treasury companies and other investors and individuals just try and implement an approach that is a lot more focused on data and analytics rather than just blind FOMO and emotions and biases that honestly impact all of us. Even though I'd like to see treasury companies doing this, can I see it happening anytime? No, because a vast majority of people underperform, and acting as a contrarian following the data will outperform a vast majority in pretty much any market. But as I said, let me know what your thoughts are, and let me know if you have any questions below in the comments and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.